SoFi is taking the world by storm. It skyrockets to $9. Now it's crashing down closer to $8 again. What should you do? Is it time to buy? Well, you've come to the right place to find out right here, right now at Barry Charles. If we do a stock analysis on SoFi Technologies. And if you wait right to the end, I will give you the possible intrinsic value of SoFi going forward and maybe somewhere you can look at investing, not financial advice. As I do the stock analysis, I will look at revenue, net profit, we'll look at shares outstanding, return on invested capital, total assets and total liabilities, PE ratio, dividends, and everything in between that this company has. And we will find out the truth about SoFi. Is it worth investing, or is it time to walk away into the sunset if you own it right now? Let's find out right here at Barry Charles. Remember to like and subscribe if you like the video. How are we going, guys and gals? Welcome back to another episode of Stock Analysis. Yes, SoFi. Yes, absolutely flying up the charts. A personal online finance company that can do credit cards, mortgages, everything in between. They are on the way up in terms of being one of those retail invested companies. Is it about time it's going to skyrocket and be booming, or is it time to really walk out the door? This is a very interesting stock, and I thought I had to do it right here, right now, while the heat is on. Let's do it right here. Let's have a look at revenue. Yes, revenue in 2022, 1.5, up 1.5 billion, up to 1.9 billion in 2023. Beauty, that's what we like to see. Net profit, this is where it gets a little bit iffy. Minus 360 million, and then in 2023 got worse than minus 429 million. So where is the money going, folks? Obviously, they're going to say they're investing more and more and more, but you should be getting more profitable, especially in a finance company. Earnings per share is minus 0.35, nothing to write home about there. Obviously not making any money. There's no PE ratio to speak about. The price range at the moment has been from 445 up all the way up to 1170. So bad luck if you got it at 1170. Well, people might say still it's a bargain on where this company could potentially be hitting. Dividend yield, there's nothing to write home about. So there's no dividend here. So this is, you don't have to worry about. But one of the biggest companies I've seen, there's obviously bigger ones, but for short interest, 13%, folks. 13% of the people out there think this company is going to fail. There must be so much people that are just shorting this stock. It's just ridiculous, absolute ridiculous, folks. The market cap of $7.3 billion. Well, definitely, if you think this company is going to turn into be one of the big banks around the world, well, 7.3 billion is just a small dip into the ocean of where potentially this company could go. Total assets, 19 billion in 2022, up to 2023 at 27 billion. Nice. Expected to improve, but not so nice as the total liabilities has gone up even quicker. 13 billion to 22 billion. There's a little bit of a gap, but it is closing, and you don't want that to continue to close. Not good at all. The debt, this is just horrendous here, folks. 6.2 billion in debt. That's more than the company that he owns. Craziness. Well, nearly more than the market cap, but it's just off the charts. There's some work to be done on that side of things. Absolutely ridiculous. Minus 2.7 billion. You'd hope they're growing at a rate of knots here, folks, to be investing into this company. Shares outstanding, 958 million. You've been diluted all the way to, from the last 2021, around 800 to 958. That's just not good. Minus 3.4 on return on invested capital, folks. This ain't looking good at all. But is there hope if you think this company is about to turn it around in 2024 and beyond? Well, absolutely. But before we get to the intrinsic value, let's quickly look at what the company can do. Well, obviously, the keys for this company is to get to profitability. But from what I've seen, it's going to take at least a couple more years. At least, probably looking at the way their margins are at the moment, unless they really start to find ways to cut down costs. They That's obviously something they can do, is cut costs, but it looks like this is a company that's on the go, starting to try and grow. Definitely needs some work in terms of where you can see it going forward. Yes, finance space is always tricky, especially to start off with. You don't want too many bad loans. You get too many bad loans, they can really cripple a company like this early on. So it's going to be a question mark if they can handle that and get through. If they do, then they could potentially be on their way. Well, it was down around 20% for the year to date, but it's really just skyrocketed. So it's pretty much nearly level now. So that was one of my talking points about this company, and that there's a positive there, but not to be. But the negatives, obviously, as I talked about, the mortgage. If people don't pay their mortgages and their credit cards, debt just continues to get higher and higher, and they don't pay it. That is the big concern for SoFi. But anyway, going forward, the intrinsic value. What is it? This is what you're all here for. Well, I use trade range for this. This is a basic calculation, which is the current share price with the earnings per share. The growth rate that you choose with the current bond yield gives you a projected intrinsic value. Well, first of all, folks, if we look right here, right now, and the price fluctuates all the time at the moment, so I'm just going a little bit more conservative. The price could be higher or lower than this, but I'm just going to stick at 750, which is around the average of where the stock has been. With the current earnings per share at minus 0.35, with just a media growth rate of 5%. With the current bond yield, you're looking at minus 6.8%. Not percent, dollars. Minus 6.8, not good. And then if you add that growth rate up to 10% with still negative, it's even worse, than minus $10.40. So currently, there is no reason at all to invest in the stock. Absolutely, you're just throwing your money down the drain. Yes. But folks, if they get to profitability, and this is even small profitability to start off with, if they get to earnings per share of 0.5 and a growth rate of 10%, you're looking at $14.90. And wowza, if you can double that earnings per share and get it up to 1 with a 15% growth, I'm trying to go a bit higher for you folks out there, that's $40. And then if you double that again with the growth rate, you're looking at $80. So that's where people investing in this stock think this is where it's going to go. If you believe they're going to get to profitability and they are going to improve their financials over time, this is a potential buy all day stock at the current price. Absolutely anything. If you believe just the predictions that it'll go to 0.5 earnings per share at a 10% growth rate for the end of time, you are going to make some money over time. But if it absolutely goes over this world, then you could be looking at a blow your hats off over $100 stock eventually. But they have to prove that. They get to prove that. Do you want to take their risks? You could be sitting in the stock for another 2 or 3 years as it just yo-yos around. But there's a potential that over time that it could skyrocket and you are double, triple, 3, 4x. And some people would argue you could 10x your money on the stock. So that's where you got to look in terms of investing in this company. This is big risk, absolutely. Do anything or not financial advice. You do everything at your own risk. Invest your stock at your own risk. For me, I potentially think this is an absolute buy. If you're a long-term investor thinking, do I want to take a risk, maybe a 5% play, or even for ones that take a lot more coverage of different companies, you might want to put a little 1% into SoFi and go, let's just dabble, let's put some money in and see if it flies to the moon. We make big money. If we don't lose a lot. This is a potential stock in that market. It's a potential to be an absolute superstar company. I don't know about superstar company, but I think it could be a lot bigger than where it is today. Yes, I wouldn't say load the boat, but then I wouldn't be surprised for some people who load the boat and think, well, that's $7 today and it's potentially easily going to get to $40. Then I just got to buy it all day. That is the risk in the stock market with any stock. The stock can potentially go to zero, wipe you out completely if they fail. So that's the risk and reward when it comes to investing in stocks like this that are still low. But if you think this company can go 10x from here to 70 billion, Well, there you go, folks. You absolutely 10x your stock. That's what you got to think. Do you think this company can go to 70 billion from here? That's what you got to decide at home. If you think so, you load the boat. Even if you think it's going to go to 20 billion, you start investing in this company. But if you think there's murky waters ahead, maybe this isn't the investment for you. Not financial advice, but to me, SoFi is definitely a potential buy right now. If you want to be probably fully, well, you never fully safe in your stock, but if it somehow dropped down to $3, then I would say really maybe load the boat then. But maybe the company's going to bankruptcy when it gets to $3, but depending on market opportunities here. But yeah, the net profit is the big concern. It's not the only concern. They're diluting you as a shareholder. They need to get free cash flow going. They've got to pay down long-term debt. They've got to be able to invest in their capital that they're getting in. They're losing it. So there's a lot of work to be done. But in saying that, if all their money is going to grow the business and the business is growing and continues to grow like it looks like on the revenue side, then that might all come to forth in 2025, 2026. But that's if they get going. And then we know the market hasn't been that great lately for the housing market, and it may continue to be. So this might be a very, very long-term play. It might not be something that makes you rich right now, but it could make you rich in 5 years' time. That's just something you got to think about if you're going to invest into this company. I don't see it just going boom, 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 boom up. But if they prove their profit, if they get a positive profitability next year, folks, then absolutely this company will skyrocket. But if it continues to waver in its net profit, you're not going to see much. You're just going to see it up and down for a while. But there's potentially a stock to buy. Not financial advice. I'm not a financial advisor. I'm just a random dude on YouTube. But thank you for watching. Remember to like and subscribe to the channel and share this with all your friends. And I will be back with another video very, very soon. 3 days a week on this channel. Have a great day out there.